you for joining us on Savvy Senior Sources, Talking with Experts. Let's take a moment and hear from our sponsors, GWG Life and Reverse Mortgages SIDAC.
Provide for your long-term care. Convert your life insurance towards payments for long-term care. If you are concerned about future health care, you can convert your life insurance to pay for home care or assisted living. Health problems can be stressful enough without the added burden of financial obligations. If you feel that you no longer need your life insurance policy, you may want to apply the value towards long-term care.
Hi, I'm Beth Paterson, a certified reverse mortgage professional with Reverse Mortgages SIDAC. Mike and Carol decided that they needed a one-level home to fit their changing health needs. They used the reverse mortgage to purchase their new home instead of using conventional financing. This has benefited them greatly. Barbara decided to do a reverse mortgage to pay off her conventional loan that she was making monthly payments on. She had funds left in the line of credit after paying that off. And a year or so later, when she fell and broke her shoulder, she was able to tap those lines of credit to pay for her home care. As she said, she would have been up the creek without a paddle without the reverse mortgage. If you'd like information on how to receive security, independence, dignity, and control in your retirement years, contact us. Hi, welcome to today's show of Savvy Senior Sources, Talking with Experts. We guide your way through resources A to V, through the TV shows as well as our website and the Savvy Senior Sources Guide. Please visit SavvySeniorSources.com for more information on the resources and how to get a copy of the guide. I'm Beth Paterson, the host of the show, and I'd like to take a moment and say thank you to our sponsors, GWG Life and Reverse Mortgages SIDAC, who make our show possible. And I'd like to welcome back my guest co-host, Lori La Bey with Alzheimer's Speaks.
Thanks for having me, Beth.
And it's great to have you back. Thanks.
Thank you.
And today we're going to be talking about long-term care insurance. And we're honored to have our guest, Deb Newman, with Newman Financial, and you focus strictly on long-term care insurance. And thanks for being here with us today, Deb.
Oh, this is delightful. Thank you. I am really excited about it because this is such an important thing that people need to plan for.
Just long-term care. And let's start out and have you tell us a little bit about you and Newman.
Well, thank you. Actually, we started focusing exclusively on long-term care insurance solutions 25 years ago. We just celebrated our 25th anniversary. So it's now we just simply say Newman Long-Term Care. And I started it back at the time when I was doing retirement planning for people. And people were saying, well, what happens if I go in a nursing home? Do I give my money away? Do I put it in a trust? Do I assign it to the kids? What do I do? And I thought, I don't know. And when I went out looking for experts, I couldn't find anybody that really understood this except medical assistance attorneys that were helping people transfer their assets in order to qualify for medical assistance. And I thought, there has got to be a better way than that. So I started investigating insurance, and in the very late 80s, Minnesota passed some of the toughest standards in the entire nation for long-term care insurance to be sold here. So Minnesota, right from the beginning, has had the toughest standards for the insurance policies to be sold here. So we have very good, government oversight, if you will, making sure that the policies that are sold here really are worthwhile. So it was in 1990 that I decided, you know what, I'm going to focus my firm exclusively on long-term care insurance, so there's a solution for other professionals to come to us that we can help them so they can help their clients.
That's great. And we serve on the Own Your Future Advisory Committee together that's here in Minnesota that talks about not just long-term care insurance, but other options for plan and the importance of planning and that. So
well, our state is really concerned about this because In 1988, they actually did a study called 2030, which projected ahead. 2030 sounded so far out into the future then, right? It's like right around the corner now. But that's when the leading edge of the baby boomers will hit their 80s.
Okay.
And so one of the things, and I'm jumping ahead a little bit, but AARP did a study, and they determined that in 2010, every 80-year-old had 7 potential caregivers. Now, not 7 willing caregivers, but 7 potential, like family members that could care for them. But by the year 2030, when the tsunami, if you will, of baby boomers reach 80, there will only demographically be 4 caregivers for every 80-year-old in their circle.
Right.
And so you look at the impact on our society, not just family by family, but our society on all that free caregiving that is going on. As you know, there's so much caregiving going on in people's homes, but it's going to be like half of the available free caregiving because of the family dynamics. And so that's why I'm more inspired every day to have people create a plan for this, because the government is not going to be able to be as generous, I think, maybe as even as they are today.
Yeah,
So
it definitely will change on how much the government can be. There will always be something for the poorest,
right.
but for the middle income, and that's what the Own Your Future campaign is, focusing on those in the middle
Right.
income, because how are we going to afford and pay for care? Let's define the long-term care versus, because I think a lot of times when people hear long-term care, they're automatically thinking long-term care insurance. And we want to clarify what long-term care is.
Well, I think when they hear the 3 words long-term care, they think nursing home.
That-
And so, that's part of our challenge to get people to want to even talk about this, because, who wants to talk about the nursing home?
and who
then,
wants to go there?
yeah, exactly. And then they think that it's about insurance, and they're like, oh, now they want me to buy some insurance to pay for somewhere I don't want to go. So it's a tough journey to get people to talk about this. So you're right. What is long-term care? So long-term care, one of the things that I always define it as is each one of us in the morning, when we wake up, we do 5 things. Now, we don't do them all in the same order, but I think the first thing most of us do is get out of bed, which is transferring, the ability to get out of bed. Then bathing, dressing, eating, transferring, and toileting. Did I say that?
Yeah.
So those are the 5 things that we do in the morning. And so once you begin to need help doing those things independently, that's long-term care. And as it is defined by the insurance, which is not necessarily what you asked about, but the insurance defines it as an inability to do 2 of those things.
Right.
So what usually triggers your ability to collect on your insurance is oftentimes bathing and dressing, just that you need assistance.
Some sort of assistance. And
Right. And then, of course, the other one that I think most of us are so fearful of that also defines long-term care is
the
memory
memory
loss.
care. Memory
Yeah.
loss.
And so,
Which is your specialty.
Yeah.
right, and the awareness that you're doing to try and build, for people to understand what goes on. And part of what scares me about dementia is that it's hidden in our society. Oftentimes, the people that are caring for someone disappear. They were in church every week in the same pew, and then one week they're just not there anymore. And people don't notice that they're gone as much as, when we're there.
Yeah.
And so that's the part of this that I'm the most passionate about, is about those caregivers and the impact that long-term care has on those caregivers. And so, Beth, when I talk about long-term care, oftentimes first define it, but then say, look, it isn't even about the person that needs the care. It's about the family, that who is delivering this care.
Yeah.
And oftentimes, people that are delivering care don't even know
They're
they're caregiving.
Yeah.
Yeah, so,
Yeah. We've had some other shows on caregiving, and one on a woman who quit her job to become the caregiver, and how it impacted her both financially and just life in
Right.
her future also.
Right.
So the importance of that type of thing. So as far as who's impacted the most is in a long-term care event is the caregiver, not necessarily just the person, as you just said.
Right, because I feel like everybody, well, hopefully most of us have a somebody. Somebody is going to be our caregiver. And whether it's just to be a companion because you've got resources to pay for the care, or they're physically delivering the care, it's that somebody that I'm most worried about. And I know the reason that a lot of people think about long-term care insurance is also protecting assets. But to me, that's secondary. But clearly, long-term care insurance does protect assets because then you've got insurance paying for care and not using your own assets. And the thing that I talk about with people is that nobody minds spending insurance dollars. And so if you have insurance and you've given each other permission at the time you buy it in your hopefully early 50s, and you're healthy and you're sitting and you're talking about it and you give each other permission at the time come, I'm giving you permission to hire somebody to bring in care. And each person gives each other permission. Then when the time comes, spend the insurance.
Yeah.
Yeah.
Well, and I think part of the issue is, though, you had mentioned that a lot of people think that they're buying insurance to secure a spot in a nursing home, which isn't the case, because they can get in-home care, and there's different levels of care that can be had. And so really planning and looking at a policy to see and exploring what is available out there for them to be able to still stay in their home, or maybe they're going to downsize into something else. But wherever they go, it's still going to be home. But it doesn't have to mean that they have to necessarily move into some type of care community.
Well, thank you, because that is the one thing about long-term care that I also even have to talk to financial advisors about.
Oh yeah.
Is that the prevalence of care is actually delivered in our homes.
Yep.
And I have statistics on how insurance pays for it, but that's, there's other people collecting through reverse mortgages and everything else. But in the insurance world, over 50% of the benefits are going for home care.
Yep.
And then another 20 for assisted living.
Yep.
So, yeah.
I think the other thing that people really have to understand too when it comes to the care, and I really like that you brought up the point that it's not just for the person with an illness or diagnosis, but it's for the caregiver. So really, this is a dual insurance policy for your relationship to help you maintain as healthy and as normal of a relationship as possible. Because so many times, statistics show many times that the care partner will pass or get ill themselves by dedicating so much time and energy into caring for someone else, they stop caring for themselves.
Right.
So this really pushes that back and puts things back in balance. And I think that that's a really important factor that a lot of people don't put as much weight on as that they should.
And Beth, one of the things that you've asked me before is when should people do this? And we are so trying to encourage people to do this in their early 50s. We have a lot of people calling, well, can my mother still get it or whatever? And the mother is in their late 70s. And I'm like, well, we can, go up into the very early 80s with some policies, but mostly, once you're past 75, you have very limited choices. But no, it's for you. At 50, you're the one that needs the plan so that when you get there, your kids aren't worried about you. And it's hard for people to look at themselves in the mirror because what is it, the 60 is the new 40? We don't think of ourselves.
And again, it goes back to the importance of planning ahead and having, and on the Own Your Future, we often talk about the importance of planning, having those conversations on where do you want to live, what are your goals, and how are you going to pay for it? Because government dollars aren't going to be there, as we've just said, as they are today. And so having that discussion, and then it does come down to the importance of how are you going to pay for the plan? Because
Well, and if I can, what's going on in the long-term care insurance business now, there's so many innovative products. So it isn't just traditional long-term care insurance that we read about, but we've also got life insurance products that have a long-term care rider, annuities that have a long-term care rider. So if you're thinking about planning for long-term care, you just need to have the courage to bring it up to your financial advisor or your attorney or accountant or somebody that you trust, and have them refer you to an expert in long-term care insurance planning, because there's all kinds of choices.
Yeah, there's a lot of options that people may not know, and we talked just before we went on air. We were talking a little bit about change that happened in the summer of 2015 to make it maybe more affordable.
Right. So again, this was part of this Own Your Own Future campaign that the states initiated. And the question was, how do we make long-term care insurance more affordable? So one of the things, and we don't have time to talk about this whole partnership program, but the state of Minnesota was a very early adopter of a program called Long-Term Care Insurance Partnership. And what it means is that if you buy long-term care insurance policy, and the policy pays, but it runs out because you bought a bucket of money of $250,000 or $200,000 or whatever, the $100,000, whatever the bucket is. And then what the state does is kind of reach across, shake your hand, and say, congratulations, you were part of the solution. So what we will allow you to do is protect assets equal to how much the policy paid out, and keep those in your family, and then the state will still be the safety net. Because the way that the state is a safety net now, basically, if you're single, you have to spend down to $3,000. Well, that's impoverished, and then the state says, okay, we'll pay for care. But if you had a long-term care policy, let's say that paid $250,000, they allow you to keep $250,000 plus the $3,000, so you can keep $253,000 in your family and still qualify for the state to take care of you. So that's what we were able to change, because in the past, it had a requirement that you put a 3% compound inflation benefit rider on the policy. Well, that made it really expensive. So we got the state to pass legislation that reduced the requirement down to 1%. So the inflation rider only has to be 1%. That reduced premiums. Now this is for people that are buying it after the summer of 2015. But it reduces the cost of a new policy by as much as a third.
That's huge.
So if you looked at it before and you know, you were like, oh, it's so expensive, it might be worth looking at it again, because we've actually, in this day and age where everything seems to be going up, we've actually been able to offer a partnership plan for a lot less money.
And let's talk about just the care of the cost of long-term care itself, because people think long-term care insurance is expensive, but not realizing that cost, if you do have a claim, and the percentage of people having a claim or needing long-term care. So,
well, so we'll start with the scary number, but that's the really minimal number. And I think a private room in a nursing facility might be as much as $90,000. And but keep in mind that that's the very small percentage of people are going to actually get to that level. But home care might cost somewhere in the range of $45,000 or $50,000 a year. And assisted living is even less expensive than that. So what I look at is to say, let's cover the cost of the prevalent care. If home care is $4,000 a month or even less, let's just insure $4,000 a month. And then heaven, forbid, if we end up in a care center that costs $8,000, well, those of us that are women understand what coupons are all about. And you will have a 50% off coupon if you end up needing the larger cost of care. But if you receive care at home, it might very well cover the entire cost. And so that's the philosophy we're trying to change, is to say, let's make this affordable so people are willing to buy the insurance. And so we're starting to talk to people about insuring for the risk of home care and assisted living.
And I like that idea. With our memory cafe, we just had a woman pass away who was in her early 60s. And we had this discussion about long-term insurance because they're comfortable with me sharing their story. But they talked about, they might have to file bankruptcy, and, he stopped working, she wasn't able to, and very, very difficult. And we talked about long-term care, and they said, we just thought we were too young.
Wow.
We just thought we were too young. And with dementia, the numbers are going down and down.
Are they in terms of when people are getting it?
Yes. I mean, there are
Wow.
people in their 60s and over, which people hear all the time, but in their 50s, their 40s, their 30s, even in their 20s, not to scare people, but they don't know what causes it. They don't know who's going to get hit with this next. Then you've got all the concussion stuff coming up, and we just have to be smarter about living our lives and realize that we're not 20. We all know we're not going to live forever, and we have to stop being afraid of what our life could look like and focus on how we can live it the best we could, and live smart by taking control and investigating, talking to somebody like you, Deb. You're just so knowledgeable and so passionate about what you do. It's just it's wonderful, to hear your passion and your drive for change to really help people, and to help with the politics of all of this stuff. But getting to the core of the everyday person to understand that this isn't something that we should be scared about. This is something we should all really be embracing.
Wow.
Let's go back to talking of other ways other than the long-term care insurance people pay for long-term care. Obviously, there's private or family members.
Right, and that's of course the first line of defense. We all will do that for our families. But what's happening, of course, in the changing dynamics of living so much longer. I mean, we are living many into our 90s, and so our kids aren't going to be able to take care of us even when they're in their 60s because they're still working. And
I often say that to people that specialize in reverse mortgages, and obviously that's another way to help pay for long-term care. But we're also saying plan ahead and do that sooner than later so that you've got funds. But people who are thinking, well, my kids will take care of me, or the whole inheritance attitude. Well, who's taking care of mom now, and what happens if something happens to them and life happens to them?
And family
is another
dynamics
thing.
have changed so severely too. I mean,
Yeah.
people aren't all clustered together anymore, and roles have really, really changed.
Yeah.
well, and then you also know that, as you mentioned, the health of the caregiver diminishes so fast that oftentimes they end up with such severe illnesses that they can't even do the caregiving and end up needing care themselves.
We just had
Yeah.
that happen again.
Yeah.
And we just have a minute left. I just want to talk about a couple of the other programs, Medicare or Medicaid. I think that Medicare is often misunderstood because it doesn't really pay for long-term care.
It's very short term.
And as you touched on, the Medicaid, the government program, you have to spend down to $3,000. Self-funding, pay out of other finances.
I'll tell you what, I'll remind again about that one word that we talked about, permission. Even if we've had people with $30 million of assets that have bought long-term care insurance. And it goes to this permission because when you've been fiscally responsible your whole life, you continue to be fiscally responsible. And so the caregivers, we can do it, we'll do it, we're fine, we're okay. They don't want to spend their own money. But if they have insurance, they're willing to spend it. And I will tell you the one thing we didn't even have a chance to talk about is the tax benefits of owning long-term care insurance. There are tax incentives for owning long-term care insurance. There's a tax credit. It may be deductible if you own a business. So those are some of the other things to talk to your advisors about to make sure that you're making a wise decision.
Yeah. So in wrapping up, there's options to pay for But are you able to, do you have those in place? I mean, our sponsor GWG does life settlements, which is converting a life insurance policy into cash.
Absolutely.
But, so that's an option, reverse mortgages, other annuities or that type of thing. But if you don't have those, or that's not enough, or use them in conjunction, the point is plan, discuss, look into the long-term care insurance because there's new options, it's less expensive, and it's a great way to protect other assets that you may want to leave to children.
Yep.
Anything you want to add real quick?
No, I think you've done a really good job of summarizing it, Beth, but in the end, in my viewpoint, as we talked a lot about, it's really about your family.
Yeah, and how you're going to help and take care of them.
Right.
Thank you very much for being on the show and sharing your insights and the importance of planning and that different options to consider, especially long-term care insurance.
Well, thank you for having me. It's been great.
Sure. And thank you, Lori, again for being co-host.
Well, thanks for having me. It's always fun.
Yes, and again, thank you to our sponsors, GWG Life and Reverse Mortgages SIDAC, for making the show possible. And don't forget to visit SavvySeniorSources.com for information on resources. Tune in next time.
What is the secondary market for life insurance? The secondary market for life insurance is an emerging financial market that provides individuals options with their policies. These options allow policyholders to benefit from the value of their life insurance. Policies are sometimes a financial burden, especially for seniors, as premiums often increase over time. The secondary market offers financial alternatives that can help policyholders benefit from their life insurance now.
Hi, I'm Beth Paterson, a certified reverse mortgage professional with Reverse Mortgages SIDAC. Bob's wife passed away, meaning his Social Security income was cut in half. His financial advisor suggested he look into a reverse mortgage. With the reverse mortgage, he was able to take a dream vacation with his nephew, and oh, the stories that they can share. After Bob passed away, his niece shared the difference that it made to the whole family. Dorothy did the reverse mortgage in order to protect her other retirement funds. With her line of credit, she was able to travel, buy a new car, and do home repairs. Years later, she's still benefiting from the reverse mortgage line of credit and not having to rely on her children. For more information on how you too can have security, independence, dignity, and control, contact us.